what we're going to really do is help you see how the sausage is made. And blockchain is a lot of different things. There's theory, technology, there are blockchain platforms, blockchain applications, and all of those things can be combined in different ways, different recipes, so to speak, as you're making the sausage to come up with different blockchain solutions. And that's one of the reasons that it's hard to define exactly what it means when we say blockchain, because there's so many different things out there. As an example, here's a statement that boils it down. You've got blockchain is a distributed ledger containing information written by smart contracts and organized into blocks that are chained together chronologically using cryptography. And this is a good example of why it's hard to understand, and as James said, it can be nebulous, because we use terms that already need explanation. You may not really understand what distributed ledgers mean, you may not understand what smart contracts are, and you may not understand how cryptography fits into all this. And we have a great group of speakers today that'll help us begin to have that conversation, begin to get to that understanding. Dan is the co-chair with the North Carolina Blockchain Initiative, and he's done a lot of work in his career with blockchain, and from a policy perspective, he brings a lot of expertise. Karen is the director of ecosystem with Hyperledger. Hyperledger is a blockchain platform, so you'll get a unique take on technology from Karen. And then Dionna's with GoCoin. GoCoin facilitates crypto payments. They convert crypto into fiat money and they guarantee that process, so they reduce your risk. So those of you that are interested in how do I accept cryptocurrency payments as a government agency, Dionna's the person to talk to. So Dan, you can go ahead and share your screen, and we'll start off with you.
Okay, can you hear me, Matt, everybody?
Sounds good.
Great.
Yep.
Okay, well, Thanks so much, Matt, and also just the whole IBTTA team. I've had the pleasure of attending some of the events with your group, getting back to before we can actually do these, back in the days before when we can have these in-person conferences. My first with IBTTA was back in October of 2016 in Cleveland. And it was a good opportunity just to interact with a lot of folks that are probably on this call. I also want to thank Pat Jones, Cheryl, and everyone for helping put this together. So who am I? My name is Dan Spuller, and I've been fortunate enough to be a part of this greater blockchain ecosystem on both the government and the industry side for a number of years. And like many of the folks in this industry, I first stumbled across it through Bitcoin, really as an enthusiast back in 2012, during which time I was also working for the North Carolina Department of Commerce. I later moved to the North Carolina Turnpike Authority and DOT, and was appointed to the state's Autonomous Vehicle Roadmap project as well. So I really have a passion for emerging technologies, not just on blockchain, but also in the transportation space. And I think there's a lot of synergy between the two that we'll discuss today. For the past 4 years, I've been in Washington, D.C. advocating for this industry. And today I'm going to provide you with just a brief overview of who and what the North Carolina Blockchain Initiative is and other state level task forces, the regulatory landscape for blockchain, and then what are some blockchain applications in government and industry. So this slide right here just covers the actual genesis of the task force. It's a nonpartisan task force that was set up last summer, July 2nd, under the supervision of the Office of the Lieutenant Governor, Dan Forrest. And it was established to study, examine, and evaluate the unique attributes and use cases of blockchain, smart contracts, virtual assets, and digital tokens, with an ultimate goal of promoting opportunities for economic growth, cost efficiencies, and strengthening our state of North Carolina as a leader in technical innovation. So historically, North Carolina was among one of the earliest pioneers in the regulatory development at the state level for blockchain-based technologies, with the passage of the North Carolina Money Transmitters Act of 2016, HB 289. What this act did was it updated the state's existing laws, and it included a definition of what was virtual currency as a term, and clarification to which activity using virtual currencies triggers licensure under the Act. And it was really ahead of its time. Just earlier, about a year before, the New York State came out with the BIT license framework, and it was criticized by a lot of folks in the industry for being really anti-innovation. So what we did in North Carolina was really help push for some exemptions and improvements to the Act that needed to be updated anyway. And so we were successful there. It ensured some exemptions for virtual currency miners, blockchain software providers, smart contract platforms, colored coins, multi-sig software, and other items like non-custodial wallets. Like many similar blockchain task forces across the United States and the world, we have our appointees participate. That they come from a wide array of experience, and they have a lot of experience and knowledge and expertise that includes technology, academia, the law, financial services. We have entrepreneurs, government officials, and others to be appointed. And we made that, we were really conscious about the appointees here because we wanted to have a broad view of what the industry represented and how many different verticals blockchain can affect. We actually have a few members on the call today with us, and they'll be in our breakout session. So I'm looking forward to having them interact with you and the folks on this task force and this working group. So since early 2016, we've seen significant interest at the state level across all the United States. State legislators are really beginning to recognize economic and consumer opportunities that this blockchain-based technology can bring. And as a result, they're introducing legislation in many cases that are supporting this growth. Some efforts have been quite progressive and forward-thinking, while others were well-intentioned but could have benefited from additional guidance from the industry. And recognizing this upward trend, the NCBI and other task forces, we've been our goal here is to develop a final report of recommendations to the state. And in that report, there'll be a series of proposals that would benefit the growth of the technology at the government level. We expect the final report to likely be published in the coming months. We're in some final phases of it right now. But in addition to what we're doing in North Carolina, I wanted to highlight on this slide a few other examples of what some states are doing to help promote and flourish the industry. This is just a few examples I cited that have come about over the past few years. Colorado, for example, stood out. They're introducing legislation that had sought to pilot the use of blockchain and cybersecurity to provide exemptions to utility tokens from securities laws, track water rights, agricultural applications, etc. Connecticut is also a fairly forward-thinking state in this regard. They've introduced some legislation focusing on government administration use cases, including voting, and how it can manage electoral information. And then, of course, Wyoming, which we've all heard, they really broke out of the pack back in 2018 with a strong progressive launch of some legislation through the work of Caitlin Long. And you've probably heard a lot about them in the news if you've been following the blockchain space. Wyoming has really emerged as a forerunner of this. They're a small state, but what they've done is they've really shown that a lot of these accomplishments can be done at the state level, and it's beginning to have a network effect. Delaware and Illinois were among the earliest states to establish actual task forces. This was back in 2016, and they deserve recognition for these policies through the two respective task forces they set up. And here's just another small list of US states that have developed these task forces and initiatives. And I know turnpike authorities, IBTTA, tolling groups, they all have activities in most of these states. And there's some opportunity there, I think, to discuss blockchain within them at the legislative level. New Jersey, we have great working relationship with Florida, and of course, California. The link here where it says among others, it's actually a tracker that is currently operating the existing states that have active task forces through GovTech magazine. So often when we talk about blockchain, we're thinking of financial service applications from remittance to Bitcoin future contracts, ETFs, trade finance. But I want to point out that many startups and institutions, while they're innovating across financial services, it's not the only industry that's going to be impacted. It was the first that really got traction, but there's a wide array and a whole large ecosystem that needs to be discussed with lawmakers when we form public policy. Notable industries that I highlighted here on this page that are really going to be affected and are growing within the blockchain ecosystem are cybersecurity, cyber resilience, and critical infrastructure. These can serve as a foundational role in protecting our nation's critical infrastructure, including roads, such as energy and other applications. Digital identity and privacy, this may be very relevant to this discussion. It's one of blockchain's most innovative and potentially impactful use cases. ID systems can streamline government services, they can reduce costs to taxpayers, and it can also increase participation in the digital economy by all citizens. Smart contracts have an enormous economic potential due to their frictionless nature, and smart contracts can increase the speed of transactions, executing them almost instantaneously. I'm not going to go into a deep dive on smart contracts, but there is a seemingly limitless number of small transactions that can take place through this technology. Intellectual property, IP. The blockchain space is a very strong open source community, and there are those companies that have chosen to protect their IP. Blockchain can help secure intellectual property. It can help track supply chain and provenance, and thus identifying counterfeit goods, for example, and maintaining trade secrets. Healthcare and insurance. Many of the problems associated with transfer storage and access to both healthcare and insurance information can be addressed using blockchain. It can help streamline overall functions, record keeping, and the claims process through a combination of smart contracts and Internet of Things enabled devices. Supply chain is another big one here. We've seen remarkable growth. Organizations are introducing blockchain apps that track a product's entire path from manufacturer to the consumer. It's quick, it's secure, it's immutable, and it's helping retail giants such as Walmart that use IBM technology to trace produce, just as an example, back to its source within seconds rather than days or weeks. And now government agencies within the United States are beginning to explore this technology to streamline government procurement. And then lastly on this list, I just put media because I think fraud has become the single biggest cost to many advertisers. Blockchain tech can alleviate advertising fraud by providing advertisers with reporting and verification tools to streamline operations. Just as a quick conclusion, I've put together some key takeaways just for you to remember and just take this with you as we enter our breakout sessions. Blockchain-based technologies and their associated platforms can be complex, but they offer immense possibilities for government, for business, for consumers. And these include opportunities for extraordinary economic growth and efficiencies. And we're working hard, our task force, to shine a light on all of these various use cases that it has to offer. And by hosting these types of webinars like the IBTTA is doing with this working group, you're playing a big role in engaging stakeholders. And we as a group must take time to learn how this works, to learn its strengths and its weaknesses, and how these attributes can create new opportunities for products and services by governments. The United States was built on entrepreneurship and innovation, and private innovation is key to continued development of useful tools for business and consumers and government. And I think really we're at the forefront of a new technological revolution here, and it's just exciting to be a part of it. So that essentially wraps up my portion of this. I can pass it over now to my counterpart, Karen from Hyperledger, if that's all right, Matt.
Thanks, Dan. Yeah, unshare your screen, and Karen, you can go ahead and take yourself off mute and share your screen.
Okay.
Hi, everyone. I'm Karen Otottoni. I'm with Hyperledger, and I'm based here in New York City and excited to be talking to you all about blockchain and about what Hyperledger is working on and helping you understand also how you could get started in exploring our community. So first, just because there may be a lot of newcomers to the topic here, I'm gonna just give a quick explanation of what blockchain is from our perspective. So essentially, what is a blockchain? At its core, it's a form of distributed ledger, or a database, as you can call it, that is append only. And what that means is that you can only add to it. You can't take information away from it once it's already been added. So it's an append only system of a record of transactions. And then to expand more about what distributed ledgers is, there's various different aspects to it. You can go on a Google search for any of these points here and get very deep into each topic if you really want to learn more, and there's a lot of information out there. But essentially that distributed database is made up of a network of nodes that generates their own data and that verifies data generated by others. And when we say a network of nodes, that can mean a network of nodes between many different organizations, between many different companies, or between different servers within a large organization itself as well. They contain a historic record of verified transactions, and they're easy to audit. There's a distributed consensus, and what that means is, in terms of the consensus, because we don't typically hear that with database, is it's a way to have everyone on the network agree on what transactions can and should be added and whether or not those transactions are valid. There's no central repository, so that means you don't have a single point of failure. And that leads to a greater resiliency for the network because you don't have that single point of failure. The ledger is distributed across that network. There's also cryptography that's used, as Matt mentioned, that adds additional security. And then for examples that use currency, there's a large economic disincentive for bad actors because, and I won't get into it, but because the way in which you would try to game the system actually reduces the value of that currency, there's a disincentive to doing that. So blockchain has really been around now for about 12 years. It's hard to believe. Feels like it's been longer if you've been in this space. It moves at a pretty fast pace. Deloitte comes out with this global blockchain survey every year that interviews CEOs of companies all over the world and what their view is on what they're doing, how they're spending money, investing, what projects are they building in blockchain. And in the one that they just released, the main takeaway really is that blockchain is integral to organizational innovation. Last year, the industry went through a little bit of a trough of disillusionment, according to the Gartner hype cycle. But we're definitely coming out of it. And I think very much it's just becoming an accepted part of what organizations are going to have to work with in the future. The World Economic Forum forecasted in that 2019, the spending on blockchain solutions would be around $3 billion, and that by 2022, it might reach 12. And I think it might actually get higher than that. So why is it relevant to transportation or mobility? Really because of those different facets that I touched on a couple slides ago. So the fact that it's on a network where everyone has visibility into the data, it increases that efficiency in terms of reducing errors. So you are digitizing a lot of processes, which reduces a lot of the errors that come from human involvement. You have increased security and data integrity as a result as well. That's partly related to the fact that you don't have that single point of failure, and also the consensus mechanisms and cryptography that's used. You've got this single source of truth where you can link interdependent transactions, which allows for a lot of complex data reconciliation to be done in a more efficient way. You've got this data sharing that can happen among those nodes in the network. And because it's append only, you are eliminating the loss of data that can happen, and forgery as well, due to the cryptography that's used. So let's jump into what a Hyperledger is. So Hyperledger is an open source project. It's a collaborative effort made up of companies, individual contributors, people from all types of industries. We are hosted by the Linux Foundation, so we are part of the Linux Foundation, and we are made up of a community that spans all industries. In case you're not familiar with the Linux Foundation, Linux is one of the first computer operating systems that was started by Linus Torvalds. It's been around for more than 20 years. And it was developed in an open source manner, back when open source was really a novelty. And so they took that approach into other technology, other pieces of software, not just personal computer operating systems, but for example, you can see here for cloud, for infrastructure, for networking. There's this automotive grade Linux project that's for the computer systems in vehicles. So these are all projects that are under the Linux Foundation that are bringing organizations, companies together to build software together. So our goals specifically though are to create that enterprise grade software that companies can be sure is sustainable, vendor neutral, and built in an open manner, and that they can use and be sure to use for their enterprise use cases. We provide that community-driven infrastructure for that open, neutral software development that is managed by the Hyperledger project by a business and technical governance as well. That's indicated in our charter. We build the technical communities as well. We have, I'm going to touch on some of the groups that we have that you may be able to join and share what the use cases are that people using our technology are building. Educate the public about blockchain in general as well. And very importantly, we build a commercial ecosystem on top of the technology. So we are helping cloud providers, system integrators, end users to realize a commercial benefit by using our technology, by building all kinds of products and services on top of it that they can use to make their businesses better and operate, whether it be faster, more efficient, etc. And you can find many of the participants in that commercial ecosystem on the vendor directory on our website. So if you are looking for some sort of service or product in the blockchain space, help with starting off a blockchain project, or evaluating a potential use case, you can go to the vendor directory on our website and use the drop-down menus to find something that's specific for you. This is our greenhouse. So a lot of times when people hear about Hyperledger, they think one, it's a ledger. It's not. They think it's one thing. It's not. We're 16 different things, which does make it a little bit of a heavy lift as a newcomer into the community. So what you're seeing here is what we call the greenhouse. So think of it, these are different projects that we are helping grow. They're at different stages of development. Some are seed, such as the stuff in labs, and some are totally production ready, reached 1.0 status, and are being used in real situations with real enterprises. The top level that you see there are distributed ledgers or blockchain. And several of them are general purpose, which means they can be used for any use case. And two of them are a bit more specific. Indy is specific for identity, and Burrow is specific for smart contracts. And then we've got libraries and tools. I can't go into detail on these in the time that I have, but all this information is on our website, hyperledger.org, so you can learn more about the ones that you're interested in. Forbes releases a blockchain 50 every year of companies that have reached a $1 billion valuation, and details what projects they're using blockchain for, what they're building. And earlier this year, when they released the blockchain 50, we saw that 52% of them use Hyperledger. Most of them use Fabric, which is one of our most popular softwares, but several others as well. And these are some of the companies that you can see are part of that blockchain 50 that are using Hyperledger. So these are the special interest groups that I wanted to highlight for you. This is just one aspect of our community, but I thought I'd highlight this because there might be some people interested in joining. Our special interest groups are open to the public. Anyone can join them. They all have regular phone calls. They have a mailing list. You can join the conversation. It's totally open to the public. They love to have new people on there because it's the more the merrier. They have work that they're doing, whether it be white papers or blogs. They have speaker series as well. And so I encourage you to go to our wiki.hyperledger.org and check them out. Maybe the supply chain one or the public sector one might interest this audience more, but whatever group you have a personal interest in, you're welcome to join. And thank you. And if you want more information, you can reach out to me or we can talk more in the breakout room.
Thanks, Karen.
Let me stop sharing my screen. You ready for me?
We are. I think,
Alrighty.
Karen, if you can unshare your screen, then Dionna can take over.
There you go.
Let's see. Share. All right, am I good? Can everybody see this? Oh, how do I get my... Okay, how's that? Can everybody see that? Can you hear me okay?
It was good, but I see a black screen now.
Uh-oh. Even now?
Hasn't changed for me.
Uh-oh.
Black as can be.
All right, let me try one more time. How about this? Nope. Yeah, of course now we'd have difficulties. Let me try one more time.
That's
Can you
good.
see that?
Yes.
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 Okay, good. Okay, so hello everybody. My apologies for the hiccup. My name is Dionna Bailey. I am a business development manager with GoCoin. And today I just want to talk to you a little bit specifically about blockchain and cryptocurrency and how it applies to payments. A little bit of background on me. I am actually retired Army. I did 18 years active duty. I did 4 tours in combat. I'm very well versed as far as government contracts, spending budgets, built hospitals in Iraq. I actually trained the Iraqi army. So when we talk about government and the hiccups when it comes to new emerging technologies, I can completely empathize with some of the positions that you're at. And I'm more than happy to answer any questions. When I first discovered cryptocurrency and blockchain, I actually told everybody that they were full of it and that there was no way it was going to do everything that they were thinking it was going to do. I was hired for a job and forced to learn the technology, and it was in learning it that I discovered that we have some fascinating, ability to do things that has not been done before. And so I'm excited to kind of share some of that with you. So for the definition, or for the purpose of this talk, I want you to think of blockchain and cryptocurrencies in these definitions. These are not the exact definitions, but when I say blockchain and cryptocurrency, they're what I mean when I'm saying it. So, blockchain is a digital representation of value that creates a permanent record, as my colleague said earlier in this talk. Cryptocurrency specifically is that digital representation and the value of money. So a lot of blockchains and cryptocurrencies can be exchanged for the value for $4, right, for USD. But cryptocurrency specifically operates in the same way that money would operate. So how does that apply to payments? And what does the current payment infrastructure looks like? So when you purchase an item, what does that process look like as compared to what it looks like when you do it with cryptocurrency and blockchain? So the current payment structure, if I'm a consumer and I want to buy something, the merchant is going to send me a bill, right? And I get that bill, I get online, I put in my credit card information, that goes and verifies with my bank that that money is in that account. Then it goes and it transfers the money to the other bank, right? And then that money is able to be in the merchant's account at that point. Where it becomes interesting with the current payment structure is that you have a single ledger that is specific to that bank. So each bank has its own private ledger, right? And I don't know if you guys have ever had this issue, but I do, where they're constantly messing up with how they track my money. So one minute I have money, the next minute I don't have money, or somebody got my account and now there's charges on there that shouldn't be on there. And anytime that there's a discrepancy with that private ledger, I'm the one who has to pay for it. So you have overdraft fees or chargebacks. You know, there's just an array of ways that banks find ways to charge you for their system issues. With Bitcoin, it's a little bit different. So if I want to make a payment with Bitcoin, it's the same process in that the merchant is going to give me a bill. But then when I send a payment over to the merchant and it gets routed through the network, you have now what is called, you know, the distributed ledger, or it's not private anymore, but it's now a public ledger. So what do we mean when we say public ledger? There are computers that go through and verify transactions. So I, as the consumer, when I go to send money to the merchant, if that money is not verified by computers that I actually have that money, that transaction is not going to go through. So there is no such thing as sending money you don't have on the Bitcoin network or with cryptocurrencies. You either have it or you don't. Now, this can be a good thing and it can be a bad thing because you don't have debt in this system, but you also don't have fraud. And you're not getting all these extra fees and spending extra money because you're spending money that you don't have. So I, the consumer, I send the money to the merchant. It goes through what they call like a block. So computers will go and they will work to make sure that that money is actually in my account. And once you have 6 confirmations that, yes, I have that money, the money is taken from my account and then given to the merchant. And it's considered within a 10-minute settlement time. So it's not as quick as the current structure, but it is permanent. So if I wanted to send $5 or if I wanted to send $1 million, that 10-minute window and those 6 confirmations are really all that I need to do in order to make that transaction happen. So what are the good things and what are the bad things about our current payment structure, right? So it's obviously the US dollar is worldwide. Everybody uses it. It is the world currency in the majority of the nations. And it's convenient, right? I can get on, I can send money to the majority of anybody, anywhere I need to. It's easy to use, and we also have credit. So I can spend money that I don't have yet as long as I promise to pay it back at whatever rate or terms that, you know, whoever loaned it to me agrees or says. So the challenge is you can get some high transaction fees. I mean, you're talking about 3% when you have a credit card system. And then you also get things like chargebacks. So for those of you who aren't very familiar, there are a lot of industries where, like ticket sales, where fraud and chargebacks become a big thing. If a customer buys something and they don't have the money or they dispute it after the fact, the merchant actually incurs additional fees on top of the loss of that sale. And so, you know, chargebacks have become a billion-dollar industry with the increase of fraud that's going on in the world. You can also get things like overdraft fees. There are long settlement times. So I work in some industries where you have high payments of thousands of dollars to millions of dollars. And rather than that 10 minutes, you're actually taking 3 days, 5 days, 10 days in order for those settlements to go through, and you're waiting on that money at the same time. You have daily caps. So, you know, $10,000 more a day gets reported to money, you know, KYC money transmitter issues. So you're not allowed to spend a lot of money. You're not allowed to move large amounts of money unless you have specific things set up for that, or if you've already worked it out with the bank. You also have a huge thing of fraud. I mean, fraud's a multi-billion-dollar industry, right? And everybody knows that. In the Army, my social security number is on everything. So I get hacked all the time. It is absolutely ridiculous. I'm on my 5th debit card this year just because I've been hacked so much. But they get that information, they can get online, they can start making payments, and then next thing you know, you're out the money and the consumer is the one that's gonna pay, or the merchant in the end, and all for things that you didn't even do, just because of the vulnerabilities in their system. You have to remember, when you're talking over the internet, is extremely insecure, right? So, or unsecure. Those transmissions can be interpreted or hacked by anybody at any time, and that sensitive information, once it's in their hands, it's kind of a free-for-all. And all of this stuff is centralized, so it's within the bank. I mean, we've had hacks happen nonstop. Look at Equifax happened. And now our information where our credit worthiness determines so many things in our lives, from auto insurance to mortgage rates to credit card rates. And if our information is not protected and we get hacked, we're paying not only because we have to deal with that hack, but the second and third order effects that come from having that money moved when it shouldn't have been. So what's good and bad about Bitcoin? Well, it's also a global system. And you have those fast settlement times. So 10 minutes or less is ideally how Bitcoin works. There are situations where it can take more or less time. You don't have very high transaction fees. So usually you just pay one transaction fee, and it's the customer who is paying it when they send the money versus the merchant having to pay it to receive it. There are no overdraft fees because you cannot spend money that you do not have in the Bitcoin network. There is no fraud or chargebacks because as they said earlier, all the transmissions that happen in the Bitcoin network happens within a cryptographic message. So every time a transmission happens, you have that cryptographic message somebody would have to hack and get through in order to intercept the transaction to cause fraud or a chargeback. And that just doesn't happen. There are no daily limit caps. There are a lot of examples to where people have sent billions of dollars for pennies, in Bitcoin, and there's nobody there to tell you you can't do that. And again, you have that 10-minute settlement time. I don't know about you, but I would love to have a 10-minute payment of like $1 million into my account. That'd be great. All the transactions are encrypted, so you have that extra layer of security where people aren't going to see what information you're transacting. And then it's decentralized, which means there's no single point. It's not one specific ledger that's private and only one system can see it. It's distributed amongst all those computers. Technically, if you own Bitcoin and you download a Bitcoin wallet, you actually have every single Bitcoin transaction that's happened from the time Bitcoin started to that point, which is what makes it immutable, right? So in order for the system to get hacked, a computer would have to produce blocks, right? Verified transactions, which is what we call a block. They would have to produce blocks faster than the 6 computers that are working to verify the network. So earlier when she said that it is a reward system for people to be good actors and not bad actors, this would be why. So some of the challenges with Bitcoin. It is newer technology, even though it's been around for over a decade. We are still figuring, out how it needs to work. Bitcoin was a prototype. It wasn't designed to be necessarily the global system right then and there. It was designed in a way to keep the infrastructure safe for what it needed to do at that time. And so there are some limitations when it comes to, being able for it to grow, to make a world adoption, but there are a lot of people out there working on it so that we can make that happen. It's not always user friendly. One of the key things that keeps the network secure is that your wallet, instead of just a password, you actually get private keys, which are 12 random words assigned to you. And anytime you want to take that wallet from your computer to your cell phone, or let's say I break my cell phone and I want to put my wallet on a new cell phone, I need to make sure I have those 12 words, which are the private keys, to unlock my wallet so that it can now be accessible on that phone. When I want to do a transaction, I'm only using my PIN or my password, but in order to enable the wallet, I have to have those private keys. There are no hacks within the Bitcoin network. There are vulnerabilities in the system, but that usually goes from the Bitcoin network to the user. So it's the internet and the software in which hosts the wallet where the vulnerabilities can be introduced, but we can talk in the breakout groups of how to avoid that. It's tough with the volatility. If you're operating a business and you accept a Bitcoin payment and it's at 9,000 right now, and tomorrow you wake up, it's at 7,000 and you haven't transferred over to the US dollar, you just took a hit on your money. And for anybody who's worked in business, you can't really operate in that way. And then the liquidity can be an issue as well. So if you want to sell your coins and the demand isn't there for people to buy them, you're going to find it difficult to exchange that coin for the US dollar. So payment infrastructure, as you can see here on the screen, these are some companies that you guys are familiar with on how instantaneous transactions or the movement of money happen. You see Visa, MasterCard, PayPal. So GoCoin runs in addition to these and not in lieu of. So when you add GoCoin as a payment option, that's what we are. We are a payment option. You still give your customers the opportunity to spend in US dollar, to use their MasterCard, and or they can pay in cryptocurrency. So how does Bitcoin, or how does GoCoin work, right? So the consumer is going to pay the merchant in cryptocurrency, and then GoCoin is going to accept that cryptocurrency on behalf of the merchant, and then we pay the merchant out in US dollar. It runs in with those other payment options, as I had said earlier. There is no integration costs or monthly fees, so we charge a flat 1% transaction rate. So if you were to integrate GoCoin as a payment option and nobody ever uses it, it doesn't ever cost you any money aside from whatever it costed for you to integrate it. You can do an API integration, or you could do a manual transactions. It's up to you and what fits your needs for your business the best. We have an excellent track record. We've never been hacked. One of the reasons is we are not the custodians of your money. We do not hold on to your money. Your money that goes to you is on your, like, you set up your Bitcoin wallet and we pay you out your Bitcoin wallet or your bank account, whichever your preference is. And then the best part is, if you're new to crypto and you want this and you're not sure how to make it work, by getting a third-party payment provider, we accept a crypto on your behalf. You never have to touch cryptocurrencies if you don't want to. We've been around since 2013, so we're long established. We were the first company ever to accept altcoins. And when I say altcoins, I mean something other than Bitcoin. When you use GoCoin, because you're never touching the cryptocurrencies, there are no additional taxes that you incur. With traditionally, if you were to do it, if you were to accept Bitcoin, every time you go from Bitcoin to USD, or let's say I accept Litecoin, in order to get my Litecoin to USD, I might have to go Litecoin to Bitcoin to USD. Each time I make one of those transactions, the IRS does require a tax. It's kind of a pain and it's a little difficult to track. So another benefit of using us is you kind of get rid of those taxes altogether and you don't have to worry about any of those issues. We don't have any liquidity issues. We sit on more than enough currencies, both cryptocurrencies and US dollars, so that we don't have to trade as soon as we get the money. We can sit on it until we need to. There's no volatility issues, and then we do pay out daily. So here's some Bitcoin blockchain myths debunked. So Bitcoin is untraceable and only used on the dark web. I know that was how Bitcoin kind of got its use case, but that's not how it is anymore. Bitcoin actually does $6 billion in transactions a day, coming in second to Visa and MasterCard. So people are recognizing it in some industries as a valid payment system, especially when you're talking cross-border payments. Bitcoin is not secure. You see all these hacks all the time. As I said earlier, the Bitcoin network is extremely secure. It's the vulnerabilities from Bitcoin to the user via the wallet or the third party or the host where you start having those issues. Accepting Bitcoin will add extra taxes to your balance sheet. Not if you use GoCoin. There are third parties there other than GoCoin that can help alleviate some of those issues. So if you are entertaining it and you are new to it, you may want to, do some research to see which would be your best method. And then the government will never support blockchain because it's used by terrorists. I know you guys probably heard that one all the time, right? So actually, the central banks are toying around with right now, releasing their own version called the digital dollar, and that will sit on a blockchain network. So while we're still exploring it, it's still a new industry, you will see more technologies adopting it, and pretty soon the digital dollar is going to run parallel to the regular dollar. And then Bitcoin is new and nothing more than a fad and will never last. Obviously, that's not true because the central banks are starting to toy with it. So the blockchain is a fascinating technology. There's a lot of capabilities and things that it can do. Payments is just one aspect, and it can be very fruitful when it comes to your company. So if you guys have any questions after this, we're gonna have our breakout groups, but if for some reason you're more interested in another topic, please don't be afraid to reach out to me. This is my email and as well as our web address and my LinkedIn. I'm available for any questions anytime, whether you use GoCoin or not. I'm just very excited about this technology, and I want to share what I know so that people can see it and embrace it and, you know, start enjoying it the way that I do. That's all I have. Thank you. I'll turn it back over to the host.
Thanks, Dionna. All right, so we are ready to go to the breakouts. And as I said before, if you happen to end up in a room that you didn't intend to end up in, just hit the leave room button and it'll send you back to the main room, and Wanda can direct you where you need to go. So Wanda,
Here comes Jessica Carson. 3, 2, 1.
Wow.
It worked.
yay!
Matt and Karen and Deanna, I think what happens is that only Pat Jones was a co-host. He even took the reins from me. So he was able to record his breakout, but the other two weren't, unfortunately. We're learning.
Okay. Well, that's right. We'll get it right next time.
We're still recording now.
Wanda, I didn't look at the numbers. Do we have everybody back?
You're
I see
close.
97 back in here.
I think you have
I think before the breakout session, we had around 120. I
Yeah.
expect people to have dropped out during.
Yeah, I think you're good to go.
Okay. So we'll just do a quick report back for the group, and that way anybody that was in that didn't get to go to a group that they might have wanted to go to, you can hear what was discussed. Kevin, why don't you start with the Hyperledger group and the technology breakout?
Sure. And Glenn, jump in anytime if you think there's something to add. So one of the really important things that we started out is defining how a blockchain operates with data. And we had to establish that a blockchain works with hashes of info rather than the actual information itself. One of the big questions a lot of people have about blockchain is, you know, if we store all the important information on the blockchain, then the blockchain really explodes in size. Data storage is a big problem. But with the existence of hashes, the actual pertinent information is not stored in the blockchain itself. What's stored on the blockchain is actually pointers to the information, and the hashes exist so that you can know that the information that the blockchain is pointing to is has not been changed or is immutable in a sense. Another thing we talked about is, sorry, just to remind myself, the clearing time for tolling use cases, just in terms of relatability to tolling solutions. Sorry, Matt, could you remind me a little bit?
Yeah, so we discussed use cases for tolling and transportation. We talked about interoperability. We talked about the idea of a customer ID, and then Glenn had another concept. Glenn, you want to mention that briefly?
Yeah, so I'm pretty cynical. I don't think the toll industry is going to change very fast. But I would say that the best approach, in my opinion, to blockchain is an approach that doesn't require everybody to change, doesn't require everybody to change overnight, and doesn't require everyone to adopt blockchain. I think that there's useful things like the example I used was congestion pricing, where we need to have very complex contracts. The owner of a car is different than the driver of the car, that's different than the person riding in the car. And we need to be able to document that in an immutable fashion. And it's not going to require the toll industry to adopt a whole new transaction processing and get everybody on the same page. Those are the things I think that are low-hanging fruit that we can do simply and easily that will be very helpful and don't require us all to climb the same mountain.
Thanks, Glenn. And the last thing we discussed was how people can get involved in the Hyperledger project through the working groups that they have. And there's a public, Karen, help me out with the name because I always forget, but it's public. Oh, you're on mute.
The public sector SIG, there's it's linked in the chat.
Great, thank you very much. Tyler, you want to give us a report back on the GoCoin group?
You bet. I will do my best. Heidi, please help out if you catch something I missed. So one of the key things I think came out of our conversation that wasn't in the bigger conversation was on how GoCoin is capable of managing the consensus model. And I won't go into that in detail, but that there's some flexibility on how quickly you can have your transaction process. And Dionna, if I misspeak, catch me. And so there's, right now she mentioned that there's a 10-minute wait time, and that's the probably the safest and most cost effective, but there is some flexibility around how that can be managed. There's a question about exchange risk and volatility, because you may have heard that some crypto markets are quite volatile. And the key is that the answer is yes. In reality, cryptocurrencies can be very volatile on a regular basis with regards to their value. However, companies like GoCoin manage that risk for you because they have a large enough account of Bitcoins that they don't need to worry about the volatility themselves. They guarantee the transaction for you at the fiat cost, which is what we would feel with dollars and cents. And then another question was tied to what is the upside of a Bitcoin pilot, and how would you approach that if you're trying to sell that within your agency or operator? And example is that she mentioned that PayPal is an existing method that's very similar to, say, if you're trying to add Bitcoin as a payment method. However, PayPal has, she mentioned that they held her money for 21 days. And so there's even some risk in the current available sources, and GoCoin as a service offers a guaranteed service at a 1% transaction fee. And so there's the concept around just simple cost savings and adding additional payment options for your customers. She mentioned that the U.S. is ahead of the game around the world when it comes to engaging in Bitcoin, even though it's very emerging. The U.S. and Canada is using Bitcoin faster than the rest of the world from a general perspective. And then we also briefly talked about the Digital Dollar Project, and that if you've heard about that in the news, there's a private program that's working with the U.S. government to try to develop the pros and cons of the digital dollar becoming reality. And then also I'll close up with the fact around cryptocurrency and Patriot Act, or with regards to privacy or requirements from the government for moving funds. And their GoCoin has to follow the laws of the states and governments they work within, and that's their responsibility. And she mentioned that there's examples where banks just don't accept cryptocurrency. So there's certain circumstances where thankfully they have relationships with the banks that they can provide those services, but there are times when certain banks just say we don't feel comfortable transacting with cryptocurrency, so you'd have to use a different bank if that's where your money is coming from digitally. Heidi, anything else I missed?
Thanks, Tyler. Let's move over to Bob Legata. Can you give us a rundown of how your group went?
It was a very active group. One of the items which was very interesting was they talked about the IRS perspective of Bitcoin, and it is property, and Dan was very informative about those types of how it's perceived. There is a definite government impact with Bitcoin, and the consideration of going with a digital dollar. They're considering it now, moving from the paper dollar to the digital dollar. So that was very interesting, and that the government is considering at this point. There are some infrastructures and pilots that are going on around in various areas. NCDOT is looking at implementation of some of these. I know that also Eric I'd like for him to weigh in a second here. But he gave us 4 specific use cases, which was very interesting. I thanks Eric for bringing those up. But blockchain is being used by Walmart to move product or to track product, which is very outside of money. And so this can be used for a lot more areas, and we did broach a number of areas. So that was very interesting to see that it's already being used for that. Eric, can you fill in the items that you did earlier?
Yeah, well, the one key takeaway from all of that is how we differentiate Bitcoin from blockchain, because there's still a lot of people, when you say blockchain, that immediately think Bitcoin or even just cryptocurrency in general. So what we briefly talked about are some use cases that don't involve cryptocurrency as a focal point of the solution, like supply chain. As a big example, e-signatures currently being piloted and used in sign request, and I believe Adobe Sign and Send now too, and how it's being looked at very heavily in healthcare as well, and that wouldn't really encompass a cryptocurrency.
Thank you. Ben, if you, Dan, if you want to add anything else to it, that would close us out.
No, I think Eric pointed out most of the items that we had covered. I definitely want to reiterate the digital central bank digital currency concept, whether it's USD coin. I think stable coins are going to be proliferating. They already are. They're fast growing. So I'd recommend everybody keep your eye on that aspect. And then, of course, the other 6 or 7 points that I had in my slide presentation.
Thank you.
Thanks. I appreciate everybody participating today. And I'll ask one last thing. If you could drop in chat just a couple of words, 1 or 2 words, how today helped you understand blockchain, or if we didn't get you over that hump, wherever you're at, just give us a little bit of feedback. If you can drop that in chat, we'll keep track of it there. And Wanda, I think we're good. Thank you, everyone.
Thank you, Matt. Thank you, group, very much. Let's wait a couple minutes and see if we can get a little more response from the audience here to your question. Here you go.
Great. And I'll just end with saying thank you to the speakers we had, Dan and Karen and Dionna. I appreciate your time, and this was a great meetup to be able to cover so much information in just an hour and a half.
When's the next one, Matt? What do you have scheduled?
I agree. Thank you.
We're slated for August. I don't think we have a date yet, but we will let you know as soon as we do.
Yes, I will. This is Frank. I will follow up with Wanda.
Thanks, Frank.
I was letting you do a little
big data, Wanda. Big data goes in July.
That big data, yeah.
End of July.
We got that one. I think we got that one coming. Yeah, we're working on that description, aren't we, with Marwan?
Yes, July 28th.
Frank's got the schedule. All right.